Joining me right now with reaction to the plan, Treasury Secretary Steven Mnuchin. Good to have you here, sir.
Good to be here with you. Thank you.
So what do you think? The Senate's come forward with their ideas. What's your sense of it?
First of all, I'd say we couldn't be more excited about the process and where we are, and we are on track to getting something to the president to sign in December. So as you know, we've been working all year with the leadership in the House and the Senate, and everybody's really on the same page. There are some minor differences between the bills, but we're very pleased with the process and how it's moving forward.
You know, they've got 7 brackets. You saw Adam Shapiro's reporting 7 brackets in this Senate plan, which, you know, I know you guys didn't want that. You wanted people to be able to do this on a postcard very simply. So is this something that you think needs to get amended?
I think the good news is both the House and the Senate have the same exact objective, which is to get middle-income tax cuts. That's what this is all about. So we'll reconcile the differences. As I said, I'm very comfortable that we have the same objectives, and we'll iron out the differences in conference.
You mentioned that you want this middle-income tax cut. But, Mr. Secretary, when you look at what people won't be able to deduct state and local taxes or property taxes, then suddenly it becomes a different equation. For those income earners out there that maybe in the middle or high middle income bracket, they're actually going to, in some cases, wind up having to pay a whole lot more, especially if they live in a state like New York or California.
Well, we're sensitive to that, and on the high end, that is the case. So for people who are making $1 million and more, that is the case. But we have been targeting the middle-income tax cuts for people in the different states, and we've been out and about and working with the states on this. I think, as you know, fundamentally, we think it makes sense to get the federal government out of the business subsidizing the states. But these are big parts of the economy, and we'll work through these issues.
It's interesting you say that. And by the way, I agree with you. Fundamentally, it makes absolutely no sense that Texas or New Hampshire or Florida is, you know, effectively subsidizing the likes of New York, right? I understand that, but I also know that you want this economy to grow, and our president wants this economy to grow. And when you look at, say, California and New York, they equate for nearly 1/4 of the nation's GDP. So they have a lot of economic output in these states. So if people in these states wind up paying more in the way of taxes because they can't deduct state and local, then that affects the nation, doesn't it?
Well, again, for most people, it won't impact them. It will impact some people in the higher brackets. But again, one of the big focuses here is corporate tax reform. Pass-throughs will have the lowest rate in pass-throughs since the 1930s. So these are going to have huge impacts on the economy. We have automatic expensing for the first 5 years, and these are things that are going to kickstart the economy and bring jobs back to America. I mean, I think, as you know, moving to a territorial system will bring trillions of dollars back here to be invested.
There's a lot of good stuff in here for sure. And the pass-through rate of 25%, that is great for small business owners. But it may not be so great for wage earners, right? Because they're still going to have to pay the higher rate. They're still going to have to pay the state and local, theoretically. They're not going to be able to deduct the property taxes, whereas, you know, the business owner who's paying 25% is going to be able to deduct state and local. So are you picking some winners there? In other words, you're saying corporations should get more of a break, small business owners get more of a break, but wage earners, they're going to still have to pay.
Well, I think, as you know, we believe fundamentally that 70% of the business tax burden is borne by the workers. So this is as much about a Jobs Act as it is a tax act. And as I just noticed, when you put up the pass-throughs on the Senate version, it's not above 30% across the board. That's just on the high end for pass-through. There's actually a discount at every single level. Okay. So at some levels, it's actually lower than the House.
Where do you think you get your most bang for the buck here? Is it on the corporate side?
I think they're both important. I think the middle-income tax cuts is a big issue for the economy and something people deserve money back in their pockets. And as you said, the business tax system, if we have a competitive business tax system, our companies can compete with anybody in the world. And right now we have one arm tied behind their backs with the highest rates anywhere.
Let me ask you about carried interest and the private equity carried interest loophole that enables private equity investors to basically treat some of their income, a lot of their income, as investment. The president campaigned on this, said that we needed to close that loophole, yet I don't see that loophole closed in either of these plans. How come?
Well, in the House version, they've moved it from a 1-year holding period to a 3-year holding period.
Right, but you know, and I know private
step.
equity investors hold their portfolios for 3 to 5 years anyway, so that doesn't necessarily matter.
Some do and some don't. And again, this is going to be an issue that we continue to discuss. But I would just comment that probably 2/3 of the carried interest actually goes to real estate and not private equity. And a lot of those are very, very small transactions that help the economy. But we'll continue to have discussions with the House and the Senate on this issue.
Do you consider that carried interest income or investment?
Well, again, it's technically it's carried interest in the way that it's allocated in the tax system, also known as profits interest.
So then you believe it should get a lower tax rate?
Again, it's a complicated issue. It's not that much money. It is something that the president feels that it should be corrected. It's a step in the right direction, and we'll be working with the House and the Senate on this.
Because they really, I mean, you point out, yeah, they changed it to 3 years, but it's not their money. It's their clients' money that they're putting to work. So I guess that's where I come back to sort of, I guess it's a debate as to whether you really see it as income, their fee, or whether you see it as investment. I think the president sees it as income, and thus it should be treated as such. Do you agree with that?
Again, the president's view has been that specifically for certain areas of private equity, that is corrected. But again, the president feels this is a big step in the right direction. And let me just say, you know, in the context of a very, very large tax bill that we want to get passed, this is just one of hundreds of issues we'll be looking at.
Secretary Mnuchin, do you think that your lawmakers there on Capitol Hill are going to be able to meet the president's deadline? I mean, will they get something by Christmas?
I'm highly confident we're moving in that direction. So I think we've had a terrific week with the rollout, both on the House and the Senate, moving the House bill to the floor. The Senate, I think, had a terrific rollout. They'll be discussing it in committee. So we're on a fast time track that's aggressive, but I think it's very doable.
And what do you think this will mean for the American economy? What can you tell Americans this will translate into for them?
Well, I think, as you know, this is a critical part of President Trump's economic plan. It's tax reform, regulatory relief, and trade negotiations. And we fundamentally believe that we can increase GDP on a sustained basis to 3% or higher, and that will add about $2.5 trillion to the government revenues and close to $10 trillion to the economy.
Yeah, and you're already at 3%, so well on your way. Corporate tax cuts, that's great, and hopefully that will add more to our overall economy. I guess there's still some things that need to be figured out, though, on the individual side. And it sounds like what you're telling me is that there's some wiggle room. Am I interpreting that right on the SALT deduction?
Well, what I'm saying is there are some very small differences between the House and Senate version. As you said, the Senate has more brackets. The House has a $10,000 real estate deduction. These are small differences. The objective for both sides is to get middle-income tax cuts. So I'm comfortable whatever gets passed on both sides will reconcile in committee, and we'll get this to the president to sign.
All right. We'll be watching. Secretary Mnuchin, thank you very much. It's good to see you.
Great to be here with you. Thank you.